So you want to build a real estate team? A confident team lead closing deals on a beach billboard. A dozen agents wearing matching polos at an open house. Everybody smiling in the group photo on Instagram. That's the picture everyone assumes. Here is the truth. A real estate team isn't a group of friends splitting commissions. It's a commission factory where the person at the top gets paid on every single deal that happens underneath them, whether they show up to the closing or not. This isn't friendship. It's one of the most quietly leveraged business models in the entire real estate industry. A real estate team isn't really about selling houses. It's about renting out a brand, a lead pipeline, and a reputation to other agents who don't have any of those things yet. The team lead builds the machine. The marketing, the systems, the buyer leads flowing in every week. Then newer agents plug into that machine and do the actual showings, negotiations, and paperwork. Every closing splits, usually with the team lead taking a cut off the top before the agent even sees their own commission. The team lead never has to touch every transaction personally, they just have to keep the machine running. Multiply a small percentage across dozens of agents closing dozens of deals a month, and the operator isn't really selling real estate anymore. They're running a leveraged commission engine with other people's licenses doing the legwork underneath it. It's the same logic as a staffing agency or a franchise. Build the infrastructure once, then let volume across many workers do the heavy lifting. The bigger the roster underneath the team lead, the less any single closing actually matters to their bottom line. Recruiting agents sounds simple, but it's really its own expensive sales funnel. Team leads spend real money on recruiting ads, coffee meetings, and mentorship pitches aimed at brand new or struggling agents who need leads more than they need independence. Onboarding a single new agent means training time, license paperwork, CRM setup, and weeks before that agent closes their first deal and actually generates revenue. Most teams lose money on every new hire for the first several months since salaries are rare in this industry and agents only get paid when a house closes. Turnover makes it worse. Real estate has some of the highest agent attrition rates of any sales profession, so a team lead is often recruiting just to replace the agents who quietly disappear within the first year. Build a strong enough brand, though, and eventually agents start applying to join instead of needing to be chased down. Leads are the entire reason agents join a team in the first place, and generating them is not cheap. Team leads spend heavily on paid ads, portal leads from sites like Zillow, direct mail campaigns, and, increasingly, short-form video content designed to build a personal brand at scale. A single qualified buyer lead can cost anywhere from a few dollars to over $100 depending on the market and the platform. Multiply that across hundreds of leads a month, and marketing quickly becomes one of the largest line items on the team's budget, often rivaling payroll itself. The trade-off is what makes the entire model work. Agents get handed leads instead of generating their own, and in exchange, the team lead keeps a slice of every commission those leads eventually produce. Without a steady stream of new leads, the whole team structure collapses, since agents leave the moment the pipeline runs dry. Every real estate team runs on a layered split, and the layers are where the real money lives. First, the agent splits with the brokerage, typically somewhere between 60 and 90% depending on their production level. Then, on top of that brokerage split, the team lead takes another cut, often 10 to 30% for supplying the lead, the brand, and the systems. A brand new agent working a team-supplied lead might only keep 40 to 50% of the total commission after both splits are taken. Experienced agents who bring their own clients often negotiate a better split since they're not relying on the team's lead pipeline as heavily. It looks generous on the surface since agents get leads, training, and support they couldn't afford alone. But run the math over a full year of closings, and the team lead's slice, taken from every single deal across every single agent, adds up to a number far larger than any one commission check. Some teams also structure splits on a sliding scale, where an agent's cut grows as they hit production milestones, which keeps ambitious agents motivated while still guaranteeing the team lead a healthy percentage during the slower early months of that agent's career. Understanding exactly where each percentage point goes is often the single most important conversation a new agent has before signing on. A real estate team isn't just agents showing houses. Behind the scenes, inside sales agents, often called ISAs, spend hours every day calling and qualifying leads before they're ever handed to a buyer's agent. Transaction coordinators manage the mountain of paperwork, deadlines, and disclosures required to actually close a deal without missing a compliance step. A marketing coordinator runs the social media, the listing photography schedule, and the ad campaigns that keep leads flowing in. Larger teams add an operations manager just to keep the entire machine from breaking down as it scales past a dozen or more agents. None of these support roles sell houses directly, but without them, agents would spend half their time on tasks that don't generate commission at all. Payroll for this support staff becomes a fixed cost the team lead has to cover, whether or not commissions come in that particular month. Money flows through a real estate team in two very different ways depending on who you are. For an individual agent, income is simple. Close a deal, collect a commission check, repeat. For the team lead, income comes from a much wider net. There's the cut taken from every agent's closing, but there's often personal production too, since many team leads still work their own high-value listings alongside running the team. Add in referral fees for leads passed to other markets, and sometimes coaching or consulting income from teaching other agents how to replicate the model. A mature team lead's income statement looks less like a single agent's commission sheet and more like a small business with multiple revenue lines, most of which barely require them to personally show up to a single showing. Here's the part most new agents don't fully understand until they've already joined. The brokerage itself takes its own split first, before the team lead's cut is even calculated. So a single commission check often gets divided 3 separate times, once for the brokerage, once for the team lead, and only then does the actual selling agent see their share. Some brokerages actually own the teams operating under their license, meaning they collect twice, once as the brokerage split and again through a percentage of the team's internal revenue. Agents rarely see this structure laid out clearly when they join, since team recruiting pitches tend to emphasize the leads and support, not the stacked math sitting underneath every single paycheck. Running a modern real estate team requires a surprising amount of software just to keep leads from falling through the cracks. A customer relationship management system, or CRM, tracks every lead from first contact through closing, and a good one isn't cheap at scale across dozens of agents. Add automated texting and calling tools, transaction management software, and social media scheduling platforms. And technology spending becomes a real monthly overhead line, not just a convenience. Teams that skip this investment tend to lose leads simply because nobody follows up fast enough, and in real estate, the agent who responds first often wins the client. For a growing team, technology spend usually rises every single year, since more agents and more leads mean more seats, more automations, and more monthly subscription costs stacking on top of each other. Keeping agents on a team long enough for them to become profitable is its own constant battle. Weekly training sessions, role-playing scripts, and accountability check-ins take real time from the team lead or a dedicated sales manager. Culture matters more than most outsiders realize, since agents who feel isolated or unsupported simply leave for a competing team down the street, taking their production with them. Some teams invest in retreats, bonus structures, and recognition programs specifically to reduce turnover, since replacing a mid-level producer costs far more in lost commissions than most team leads initially expect. The teams that last longest usually aren't the ones with the flashiest lead generation. They're the ones that figured out how to keep good agents from walking out the door to build their own team somewhere else. Let's actually run the numbers on a real mid-sized team. Revenue comes from agent commission splits, personal production from the team lead, and occasionally coaching income. Expenses come from lead generation spend, support staff payroll, technology subscriptions, and office space if the team maintains a physical location. After subtracting all of that, the margin on any single closing can look surprisingly thin, especially once brokerage splits are factored in on top of everything else. But scale changes the math entirely. A team lead making a small percentage off 15 agents closing several deals a month generates far more stable income than any single agent chasing listings alone. Ask any honest team lead, and they'll tell you the real profit engine isn't any one sale. It's the sheer volume flowing through the pipeline every single month. Here's the part most people miss entirely. Many top team leads eventually stop caring about their own personal commissions altogether because the real money shifts toward recruiting other agents into a revenue share or franchise-style model. Under these structures, a team leader can earn a small percentage from an agent's production for years, sometimes indefinitely, simply for having recruited them in the first place. Recruit enough sub-agents and that trickle of override income can eventually exceed what any single agent earns from actively selling houses. It's less about closing deals personally, and more about building a pyramid of production underneath your own name, collecting a sliver from every layer below. Real estate teams carry more legal exposure than most people assume from the outside. Agent misclassification is a constant risk, since most agents are technically independent contractors, not employees, yet many teams manage them with employee-like control over schedules and scripts. Get that classification wrong, and a team can face serious back taxes and penalties from state labor regulators. Errors and omissions insurance becomes essential too, since a single mishandled disclosure or missed deadline can trigger a lawsuit that follows both the agent and the team lead who trained them. Disputes over commission splits, especially when an agent leaves mid-transaction, are common enough that many teams now require signed independent contractor agreements spelling out exactly how a split gets divided if someone exits before closing. Add fair housing compliance and advertising regulations, and legal risk quietly becomes one of the most expensive parts of running a team that most recruiting pitches never mention. Even the team's name and marketing materials have to comply with state real estate commission rules about how a team can present itself relative to the brokerage it operates under, and violations here can trigger fines that eat into a quarter's worth of profit almost instantly. Eventually, some team leads outgrow the local market entirely and start expanding into other cities, either by opening satellite teams or partnering with agents in different regions under the same brand. Franchise-style real estate models take this even further, licensing an entire system of scripts, branding, and lead generation playbooks to team leads in markets the original founder has never even visited. Royalties flow back to the franchise or the original team brand on every single closing, regardless of who actually worked the deal. This is where real estate team building starts to resemble a true franchise business more than a sales career, since the founder's income becomes tied to systems and licensing fees rather than any individual transaction they personally touch. A handful of national team brands have taken this to its logical extreme, operating almost like a master franchise, collecting a small fee from thousands of agents across the country who never interact with the original founder at all. Many successful team leads eventually face the same question every small business owner faces: keep grinding personally, or build something that can be sold or handed off. Larger brokerages and even private equity-backed real estate platforms have started acquiring high-performing teams, valuing them not for last month's closings, but for the recurring systems, the lead pipeline, and the roster of trained agents already in place. A team with strong retention and a proven recruiting funnel can command a real acquisition price, treated almost like a small business sale rather than a simple change of sponsoring broker. Succession planning matters too, since a team built entirely around one charismatic team lead's personal brand can collapse the moment that person steps away, while a team built on systems and shared culture tends to survive leadership transitions far more smoothly. Real estate teams are far more exposed to market swings than the polished marketing usually lets on. When interest rates rise and buyer demand cools, lead costs go up while conversion rates go down, squeezing the exact margin the team lead depends on. Agents who joined during a hot market sometimes discover they can't survive a slower one, and teams that overhired during boom years often have to make painful cuts to staff and marketing spend when volume drops. A team lead who scaled recruiting aggressively during a seller's market can suddenly find fixed costs, like salaried support staff and long-term ad contracts, outpacing the smaller commission checks coming in during a downturn. The teams that survive multiple cycles are usually the ones that kept their overhead lean enough to weather a slowdown without dismantling the entire machine they spent years building. Some experienced team leads even use downturns strategically, since struggling competitors are often the easiest time to recruit their best agents away, quietly growing a roster while everyone else is busy cutting costs. Not every real estate team is built the same way, and the two extremes look almost like different businesses entirely. A mega team might run 50 or more agents, a full call center of ISAs, and a marketing budget that rivals a small local brokerage, closing hundreds of transactions a year across an entire metro area. A boutique team, by contrast, might run 3 or 4 hand-picked agents, a tighter culture, and a much smaller lead spend, trading raw volume for higher splits and closer mentorship. Mega teams win on sheer scale and negotiating power with vendors and lenders, but they also carry heavier fixed costs and more turnover to manage. Boutique teams stay leaner and more profitable per agent, but they cap out earlier since there's only so much personal bandwidth one team lead can offer before growth requires letting go of some of that hands-on control. Neither model is inherently better. They're simply different bets on how much a team lead wants to trade personal involvement for scale. So which is it? A mentorship program for new agents, or a leveraged commission pyramid? If you're a brand new agent joining a team, you're trading a chunk of every commission for leads, training, and support you couldn't easily build alone. But if you're the one running the team, the picture flips completely. The smart operators in this industry were never really top producing salespeople. They were systems builders who happened to still close a listing here and there, while the real income compounded quietly underneath everyone else's paycheck. That's the real economics behind real estate team building, layered commission splits stacked on top of expensive lead generation, funded by a pipeline of agents who do the legwork while a percentage of every single closing flows upward, month after month, deal after deal. The polos and the group photos are just the marketing. The spreadsheet underneath is where the actual business lives. If videos like this help you see industries differently, subscribe. There's a lot more where this came from. See you in the next one.